Imagine this. Your child grows up, chasing their dreams, starting a business, going to college, maybe even buying their first home. Now imagine you've set them up in a way that money isn't a stressor. It's a tool, something that works for them instead of holding them back. This isn't a fantasy. This is exactly what life insurance combined with the concept of infinite banking can do for your family. Why traditional savings isn't enough. Most parents save for their children. They put money in a bank account or invest in mutual funds. But here's the problem. Traditional savings accounts give almost no growth, and inflation quietly eats away at the value. Even investments can be risky. One bad year in the market can set back years of planning. And loans? Well, most families rely on banks, which charge high interest and control how money flows in and out. But what if you could take control? What if you could create a system where your money grows predictably, is accessible when you need it, and even helps you teach your children about financial discipline? That's where life insurance and infinite banking come in. What is infinite banking? Infinite banking might sound complicated, but it's actually simple. You use a specially designed permanent life insurance policy, usually a whole life policy, with cash value. This cash value grows over time, tax-deferred, and you can borrow against it at any time without credit checks or complicated forms. Think of it as creating your own personal bank. Instead of giving your money to a bank and paying interest to them, you are lending money to yourself. Every time you use your policy, your money continues to grow as if you never touched it. Over time, this system becomes a powerful engine for financial freedom. Here's the beauty. You can start a life insurance policy on your child when they are young. A child's policy is much cheaper, and the cash value grows for decades. By the time they are adults, they have a significant amount available that can be used for college, starting a business, or even buying a home. And it's not just about giving them money, it's about teaching them financial literacy. With a personal bank already set up, they learn the value of borrowing and repaying responsibly, compounding interest, and making money work for them. You're not just giving them funds, you're giving them a system that sets them up for financial independence. The power of compounding. Over time. The earlier you start, the stronger it gets. When your child is young, even small contributions to a permanent life insurance policy have decades to grow. The compounding effect is incredible. What might start as a few $1,000s can grow to hundreds of thousands by the time they reach adulthood, without risky stock market bets. Every year, the cash value grows, dividends can be added, and interest keeps compounding. The result? A safe, predictable growth of wealth that banks and traditional savings simply cannot match. Infinite Banking Strategy Review, link below. Protecting against life's uncertainties. Life is unpredictable. Health emergencies, economic downturns, or unexpected expenses can strike anyone. A permanent life insurance policy protects against these uncertainties. While your child's policy grows in value, it also guarantees a death benefit. This means that even in the worst-case scenario, your family is financially protected. It's a safety net wrapped in a growth vehicle. The same policy that grows cash value can step in as a financial shield if needed. Flexible access. When you need it. One of the biggest advantages of infinite banking is access. Money in a traditional investment might take days or months to liquidate. Bank loans can be strict, and interest can eat away at what you borrowed. With a child's life insurance policy, you can borrow against the cash value anytime. Want to fund their college? Tuition? No problem. Need a down payment for a first home? Easy. Even emergencies can be covered quickly. And the best part, you're paying interest to yourself, not to a bank. Teaching financial responsibility money alone doesn't create success. Knowledge does. By introducing your children to the concept of having their own bank, you teach them the most valuable financial lesson: control over money. They learn how borrowing works, how interest affects debt, and how to grow wealth safely. It's like giving them a financial toolkit that no school teaches, but every adult wishes they had. Start with the Infinite Banking Strategy Review, link below. Let's look at the alternatives. Stocks, mutual funds, and savings accounts all have limitations. They can be volatile, restricted, or inaccessible when needed. College savings plans often lock money into specific uses. Permanent life insurance paired with infinite banking is different. It combines growth, accessibility, and protection. You're not gambling with market fluctuations. You're creating a system that works reliably over time. It's predictable, flexible, and designed to last a lifetime. Building wealth. Generationally. This isn't just for your child, it's for future generations too. Many families build generational wealth using life insurance. The policy you start for your child today can eventually become part of a larger family strategy. It's a gift that grows, compounds, and even passes on in ways that traditional savings cannot match. By thinking generationally, you're giving your children more than money. You're giving them freedom and options they might never have had otherwise. Common misconceptions. Some parents think life insurance is only for adults or that it's expensive. Here's the truth. A child's policy is surprisingly affordable, and starting early maximizes growth. Another misconception. Infinite banking is complicated. It isn't. Once you set it up properly, it runs automatically. The cash value grows, dividends add up, and loans are simple. It's a system designed to make money work for you, not the other way around. Real-life example. Imagine a family with a 5-year-old child. They start a life insurance policy with just a small monthly contribution. By the time their child turns 25, the cash value has grown substantially. The child can use this money for education, starting a business, or even a first home. Meanwhile, the policy is still growing, still protected, and still earning dividends. This is not a dream. It's happening every day for families who understand the power of this strategy. Getting started. Starting is simple. You don't need to be rich, you just need a plan. Speak with a financial professional who understands infinite banking and child life insurance. Decide on a policy, set up contributions, and watch it grow over time. The earlier you start, the more powerful it becomes. If this message made you think differently about money, banks, or protecting your family's future, the next step is not a sales call. Infinite banking is a long-term strategy, not a product, and it's not right for everyone. To help determine whether this approach fits someone's goals, cash flow, and expectations, we've created a short infinite banking strategy review. Start with the strategy review linked below. If it appears to be a potential fit, the viewer will be invited to schedule a brief, educational conversation. No pressure, no obligation, just clarity. Start with the strategy review linked below.